Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Tuesday, March the 10th. Welcome, everybody. Look at what we've got going on here. What a wild ride. Am I right? Before we jump into the charts, I want to say hello. If you are here this morning and you have not said hi in the chat, drop your name in the chat. This is a friendly, interactive stream. This is a place for traders of all levels, but I especially want to help newer traders who are trying to get started on their trading journey. I'm going to take live trades together with you. I'm going to take them in front of you. I'm going to talk through my strategies, my entries, and my exits. And we're going to do some market analysis and some learning together, all for free. Nobody is putting in credit card information. This is just a place to learn and grow together. However, if you could help me out with a subscribe, that would really help my channel grow, and I would appreciate it greatly. Okay. So let's go ahead and jump right in here. We are looking at a strong reversal here, and I've already traded this to the upside, but we are starting to hit some resistance areas. So I'm going to take a look at these and see where we could possibly be stopping. Now, as you may or may not recall, we had a wild ride yesterday where the market dumped pre-market to all the way down below the 200-day moving average. Absolutely huge drop. And it had to do with oil and Iran. And okay, we're still moving up here. 681 is where we're sitting on the SPY right now. Oil, Iran, the whole deal. And then President Trump came out and said the war is almost over. Oil is going down. And sure enough, oil had jumped up over 120 a barrel, came all the way spiraling back down to below 87. The market rose with it. Yesterday's rise was crazy, almost meteoric. And then today we came into the morning with a bit of a move down, but I had kind of sensed this might be a little bit of a fake out. And I think it was, of course, because look what it's done. It's given us, what's this symbol, guys? You know it. I talk about it a lot. The Nike swoosh. The just do it. Just take the call. This is the Nike swoosh here. The check mark. So we had this little fake out. I did not trade puts here. I had a feeling we were going to get a bounce, and I've traded a couple of calls. So doing well on those. And right now we are hitting a bit of a resistance. Right here at this yellow line is the overnight high. Now, as you guys may or may not know, I track overnight highs and lows. I track yesterday's highs and lows, and I put them on my chart. So you can see here, look at the low from yesterday. Good grief. 6,500 on the ES. 300 points below us. This is a wild swing right here. So this was our yesterday's low of day. This was our overnight low. This was yesterday's high of day. So the blue lines represent yesterday's low and high. The yellow lines represent the overnight low and high. Okay. So we are currently testing last night's high. This can act as a resistance, meaning a ceiling where we don't want to go any higher. Can be, it doesn't have to be, but sometimes we do see this slowdown at the overnight high. So let's give this a minute and see. This has been quite the run off the bottom. 67.67 all the way up to 68.35. So basically, you know what, 70 points run here in the last several minutes. Like I said, I traded this. I made a little money off of it. Nothing crazy, a couple of quick moves, but enough to start making some money today. And now we just got to wait and see what we're doing at this potential resistance level. All right. And if you're here, drop your name in the chat. I would love to know who you are. I'd love to meet you. I'd love to talk with you. I'd love to answer your questions. Say hi. This is a friendly place. Everybody is welcome here. Traders of all levels are welcome here. Nobody is going to make you feel like you don't know enough. That's for sure. We're all learning here together and we're all at different parts of our journey. Bill is here. Good morning, Bill. Thanks for saying hi. I appreciate that. All right, getting a bit of a response here. Look at that, guys. To the tick. Do you see it? Let me zoom in. If you can't, I'm going to zoom in for you. Do you see this overnight high? That's this yellow line. I draw these on my charts every morning before the day starts. I draw these lines. And look at this. What happened to this candle? It stopped right on the overnight high. Now, does that mean we want to consider puts here? Not necessarily. Yes, we're getting a roundover, and yes, we could come screaming down, but this has been a pretty strong run, so I'm not going to jump into puts right off of the bat. Dina, good morning. Good to see you. Thank you so much for joining. Gavilan is here. Good morning, Gavilan. Thank you guys for saying hi. I always love to know who's here with me. It helps me to feel like I got some company in this trading journey. All right. Getting a bump on the VIX here. Now look at how far the VIX got beaten down. We were up over 35 on the VIX and they just beat it right down to 22. Now, remember that 22 is still elevated. Technically speaking, on the VIX, it's still a bit elevated. And when the VIX is elevated, remember that's our volatility index. That tells us how much fear is in the market. When the VIX rises, there's a lot of fear in the market. When the VIX drops, there's more complacency and risk, what we call risk on trading. Val, good morning. Thank you so much for joining. I sure appreciate it. Okay, so the VIX got knocked way down from 35 all the way down to 22. That is an enormous move on the VIX. So now, just because it's been knocked down doesn't mean everything is great, because 22 or 23, where we're sitting, 22.8, is still elevated. And when we have an elevated VIX, we do still have some fear in the market. So that's something to be aware of. Even though we're getting this beautiful run, which we traded, I traded, we do still have some elevation in the VIX. So we want to be careful. Freaky Turkey is here. Good morning. Thank you for joining. I sure appreciate you guys saying hi. Thank you so much. If you guys haven't subscribed, would you do me a favor and just hit that subscribe button? It really helps me out and I would appreciate it. Thank you so much. All right, so our MACD has rolled over. Andrew, good morning. Good to see you. Welcome. All my trading friends joining here today. So happy to see you guys. Aggie, good morning. Aggie, I saw your comment and I forgot to respond. You had asked if I changed my time, and I know you're from out of the country, Aggie, so I apologize. Here in America, we have the crazy daylight savings, and trust me, it probably sounds crazy to you. It sounds crazy to us too, because your whole circadian rhythm gets thrown off. Yesterday, I was dragging. I had a hard time with daylight savings yesterday. So thanks for your patience, Eggie, and I'm glad you found me. Emerald Plumber, welcome, Emerald. Thank you so much for joining. Love that. Excellent. Thank you guys so much. What I want to do is build a community of people that support each other here, that encourage each other. This place is going to be encouraging and full of support. That's what I want this space to be. So thank you so much for joining and saying hi. I really do appreciate. Eggie, I asked ChatGPT and it's summertime now. Okay. Well, it's kind of summertime. So we're, at least here in Colorado, we are in the spring, but the daylight savings kind of does this late spring, early fall kind of thing. It's a whole thing that dates back to the time of all the, we were much more of an agricultural society and farming. And so farmers needed longer days. And so that's what it dates back to. It's outdated now. I wish we would do away with it, but here we are still dealing with it. All right. So, getting a little bit of a pushback off of this overnight high. I'm not sure that we're done with the run up, but let's take a look. Something that helps me kind of figure out where we're going. Couple of things that help me. I look at Bill, back to Ben Franklin. Yeah, is that how old it is, Bill? I didn't realize it was that old, but wow. Okay. Thanks for the history. A few things that help me define where our levels are going to be. There are a few things. Of course, support and resistance, which I draw on the charts. Of course, highs and lows of previous day and previous evening. Also, I look at our leaderboard. I'm looking at usually for the SPX, the S&P 500. I'm going to look at what we would call the Magnificent Seven, the big tech stocks for leadership. So we're talking about the big titans, right? The Microsoft, the Meta, Apple, Amazon, Nvidia, Google, Tesla. These guys are the titans, right? Trillions of dollars of investments in these companies, and they run the Nasdaq and they run the S&P 500. So as they go, so go those two indices. Now the Russell and the Dow, that's a little bit different. That's a different story. But I will look to the Mag 7s and I will look to the Nasdaq for leadership. Sometimes it is the SPX that leads. Sometimes it is the Nasdaq that leads. Sometimes it's the Mags that lead, the Magnificent Seven. So I usually come over here, take a look at my leaderboard. I keep the Magnificent Seven over here. I keep all of the indices over here, and I watch. So right now we've got Nvidia up today at 185, sitting at 1.7% elevated. Same with Meta at 1.6%. Gold and silver both up today. Tesla up 1.3%. The IWM, that is the Russell. Remember, that is 2,000 small cap stocks, whereas the S&P 500 is large mega cap stocks. The Russell houses 2,000 small cap stocks. So we keep an eye on the Russell. Russell sitting elevated today at 0.79 or 0.8%. So much higher than we are right now. And then we've got the NASDAQ sitting at 0.5% elevated. And then we are not quite dragging up the rear, are we? Where's the Dow? We're neck and neck with the Dow. So the Dow's sitting about 39% elevated. We're sitting at about 33% elevated, 0.33, excuse me. Shouldn't say 33%. And so we're kind of dragging up the rear here on this recovery, but it's been sharp and strong, hasn't it? 75 to 81. So again, 60 points of run there. And who's on our loser board here? Not really anybody. Microsoft down about 0.8. That's about it. Everybody else looking pretty strong this morning. The MAGS, MAGS, as a whole, this is an ETF that houses all of the Magnificent Seven. And so if you want to get a gauge on what the Magnificent Seven is doing as a whole, you can look at the MAGS. It's up 0.78. So a good bit. Up a good bit. Now, if we start rolling back up here, I may consider a call. And if I took a call, it would be today's expiration, first strike at the money or in the money, you would say. 680 calls is what I'd be looking at if I were to take a call here. And I'm going to watch and see. The things I like to look for are the MACD rolling up. I like to see the VIX confirming. So right now the VIX is pushing up and the S&P is pushing down, but we're starting to get a little green going on here. So let's watch and see if the VIX starts giving us some downward movement. And we are sitting right at 68.17 on the SPX. Now, 6,800 is a big, there we go. 6,800 is a big level. It is support and resistance. And when we get a minute, we'll go look at the daily chart and I'll show you what I mean. Getting a little push down on the VIX, getting a little push up on the SPY. $16.07. Got enough room to the top here. What I'm watching for is a little push upward here. 24 points. $681.6 was our high. All right, I'm going to jump on the calls here. I'm in, punch it. All right, I'm out at 13%, punch it. That was a nice little win there. I hope you guys were able to follow. Did anybody follow on that one? And there's a reason I jumped out so quickly. This right here, I think we're going to break it and continue up. I'm pretty convinced of that. But because it acted as resistance before, I don't take any chances. My style of trading is really fast, in and out. And when I see a 12 or a 13% win in 1 minute, you better believe I'm going to take it. All right. What was the draw to move before MACD? Oh, Freaky, great question. You know, Freaky, I'll tell you this. Usually I do wait for the MACD, but there is, I don't know how to put it. You can see a movement in the candles. I don't know if that makes sense. When you've been trading a long time, you can feel, I don't know, this is going to sound so woo-woo, but you can feel the movement, the upward or the downward movement in the candle. And there was elevated volume here. Do you see how the volume started increasing here? There was a drop on the VIX and it was continuing downward. So all of those things considered, I chose to take the move before the MACD confirmed it. The other thing is we had this space from here to the overnight high that I was pretty convinced they were going to come test again. So all things considered, that is why I jumped in there. Great question, Freaky. Thank you for asking. All right. So did anyone jump on that one with me? Anybody take it? Cool. Thanks. You are so welcome. All right. Let's see if we bump our heads here again on this overnight high, or if we continue on through it. I think at some point we will continue on through it. Val, nice trade. I hope you took it, Val. Thank you so much. So let's see what we do here. If we punch up through this, we could consider another call. Got in slightly earlier and made 10%. Nicely done, Val. Excellent. Thanks for sharing. All right. I am going to load calls here because I think they're going to try to push through here. I'm looking at 681 calls. Oops. I just clicked the wrong thing. Looking at 681 calls, I'm not in yet. Still kind of waiting to see them push up through here, and we may not. So that's what we're watching. So remember, I was just saying a minute ago, the different tools that I use to kind of help me decide where our levels are. Again, we were looking at the leaderboard right here. We're looking at overnight highs. We look at yesterday's highs and lows, last night's highs and lows. We look at support and resistance. So if I moved this over to the SPX, which is where I keep all my support resistance lines marked, I'm going to look at the daily. Remember, the SPX is the S&P 500 index. That's what a lot of the platforms call it. A lot of the brokerages have that name. It's called the SPX on Thinkorswim. So take a look at this chart. What is the next thing we see overhead? We see the 100-day moving average right here sitting at 68.41. I bet you dollars to donuts they're going to try to come and test that today. That is only, what, 15 points overhead? 68.40? Yeah, 15 points overhead. I have a feeling they will try to test that today, even though look at the size of the range today. Today's range is 68 points. Could we throw another 15, 20 points on there? Yeah, absolutely. I think we can. However, this is what usually happens in these kind of situations. When we have a very clear overhead target, a lot of times you will find them playing cat and mouse, up and down, holding out the carrot, pulling it back, holding out the carrot, pulling it back. So that's why we're always careful. I'm always careful. I'm always in and out quickly because this is such a common thing that I see all the time. We have an overhead target and they are really trying to toy with you. And the name of the game, here's the name of the game, guys. When you trade zero DTE options like I do, like we do here, zero DTE options, meaning they are going to expire today, 0 days to expiration. 0 days to expiration, we are looking at this option expiring by the end of today. What that means is that's a bit risky in the sense that when you buy that option, if you don't do anything with it by the end of today, boom, you've lost what you put into it, right? So when I trade zero DTE, I take a little of the risk off the table. My goal is to be in and out as quickly as possible. Boom, boom. That's what I want. Just like you saw on our call trade, 1 minute, 13%. Boom. Let's do it. Let's get out. Lots of people will feel like, oh, I left money on the table. Look how far it went. You cannot think that way when you're trading 0 days to expiration. You cannot hold on and swing for the fences because the longer you hold that option, the less it's worth. You're going to get to zero at the end of the day. So back to how do I determine what's going on overhead? The very next thing we've got going on overhead is the 100-day moving average sitting at 68.40-ish. The next thing above that is our 68.50. This line is so important. I've highlighted it in yellow for you. This line is very important. This has been, call it a pivot zone for weeks now. We've been seeing this pivot zone, right? Let me zoom out and you'll see what I mean. So the line is marked in yellow, so it stands out a little bit more. Look at how many times we have pivoted over and under this yellow line, like a snake over and under, right? And again, we took this really hard bounce all the way down, almost, well, it did touch the 200. You can't see it here on the SPX, but in the after hours, it did touch the 200 and even broke it. And then this incredible Herculean bounce that we've got. Now, does that mean that we are done with this downward trend? Not necessarily. just because we have this big push, and it's a big push, and I'm trading to the upside right now, does not mean that we will not come and drop again. So part of what's responsible for this push is the whole oil situation. Oil runs everything. Oil rules the economy. So when the Iran war started, oil jumped, right? And then it got worse because they were, trying to tie up the Strait of Hormuz. Now we can't get 20% of the world's oil out to the rest of the world. Global prices are rising. It's not just a US problem, it's a global problem. Economies immediately started shifting the price of gas. All of this began to happen. Well, as we saw this sink, and I'll tell you this about President Trump. I have noticed that he does not want to see a market crash. And whenever the market begins to start this crash behavior, he will jump in there with something that brings the market back to equilibrium. I've seen him do it over and over. He's done it with the tariffs to the point where he started getting called the taco trader, right? Trump always chickens out. Taco trade is what they called it during the whole tariff thing, because he would see the market start to crash and then he would back off on these tariffs and he'd say something different. He did the same thing yesterday. He said the Iran conflict is almost over and you're going to see gas prices going down. Well, boom, from his mouth to God's ears, just about. Oil went from over 120 a barrel all the way down under 87 a barrel. And you saw the market do the same thing, but in reverse, right? So as oil was spiking, the market was tanking. And then oil did its reversal down and the market did its reversal up. And that's what this candle is all about right here. Now, just because President Trump says oil is going down, the war is almost over, does not mean that the war is almost over. It's his way of trying to kind of, I think, prop the market up, right? Because we are still in a downward channel. If you look at the high in the market that was created on January 28th, we have been making lower highs and lower lows ever since January 28th. Now, we are getting a bounce. Is it what we call a dead cat bounce? Dead cat bounce is a gross name, but it's been around for a million years. Dead cat bounce meaning that the market tries to come up, but just can't do it. It gives this little rise and then boom, falls back down. That's a dead cat bounce. So is that what's happening here? I mean, this is a good sized bounce. So we will see what happens here with this downward trend. Now, what's going on? So that's how I'm finding my targets, right? So we talked about volume, we talked about the leaderboard, now we talked about support and resistance. This is how I'm finding where we're going to stop or slow down. I think today we could still come up here and tag this 6840, tag this 100, maybe even reclaim it. That is what the bulls need to do. If we don't do that, it is possible that we start to fall back down. It is possible. So here's the beauty of day trading. We don't have to be married to a single position for days and weeks and months. We can, Eggy asking, what does pivot mean? We can pivot our position, meaning, Eggy, if you ever seen like a basketball player, it's the best way I can define it. They have to keep one foot on the ground when they're moving, right? They will, if they're going one direction, they'll stop and they'll turn on that foot, that planted foot, and they'll just like do a 180 and go a different direction. That's pivoting, right? You get to a level, like for example, we're going to take, let's say, calls, and then all of a sudden it starts to drop. We're considering taking calls here. It's moving up and then it starts to drop. Boom, we're going to pivot. We're going to shift 180 and we're going to go to puts if the market tells us that that's what we need to do. So that's a pivot. It's a turn in direction, 180 degree turn in the opposite direction. Okay. Great question, Eggy. Thank you for asking. Okay. So right now you can see they're just holding this resistance zone right in here. And that is, you're welcome, Eggy. Great question. We're gonna, let's see here. I'm not feeling a put at the moment, even though the MACD has rolled over. We haven't gone very far away from this overnight high. Now, that doesn't mean we won't. It doesn't mean we won't come down, but I would be watching this little swing low that we've got going on right here. If we turn and start moving up to try and break the overhead resistance, then I might take another call. So let's get back over to our minute chart. All right, so what we're seeing here is the beginning of a sideways range. VIX sitting at 22.9. If we come down and break this level right here, I might consider puts, but it could also be a little bit extended. So I think I'm going to shift to the 680 calls if we get a move upward. Right now, I'm not looking at it to happen. Let's see what goes on here with this swing low right here. 35 down, Qs are 50 down, mags are 60 up. Sorry, Qs are 50 up. Okay. Let's take a look at our volume real quick here. We have got 234 sitting at 680 on the call side. Much higher volume on the call side than the put side. Looking like growing volume all the way up to 682. Okay. All right, little bounce here off the 50. Let's see what happens. I'm going to take a quick look at the gamma. I use a third-party program to do that. Right now, I'm looking at positive gamma, 1.1 billion, so that's a good amount. We've got negative put gamma sitting at 1.9 billion. We've got positive put gamma or call gamma sitting at 3 billion with a net gamma positive at 1.1 billion. Call wall currently sitting at 682 just overhead, which is exactly what our volume was looking at. 670 is the put wall. So let's go take a look again at the volume because volume was also building at 670. I didn't mean to say 670. I meant to say 680. 682. Hello. 682 has got some building volume here, and it is the current call wall as far as gamma goes. Okay. Getting a little drop here. Starting to test this swing low right here. All right, if we get a bounce here, and we start to turn, I might consider calls. It's trying to hold this 50. See this royal blue line here? That's the 50 period moving average. Looks like it wants to hold it. And we'll need to see a drop on the VIX, and it looks like we could be getting one here, sitting at 22.98. All right, and again, I'm sitting on the 680 calls. Not in anything yet. Right now, we're ranging between the overnight high and yesterday's high of day. So, like we talked about earlier, those are the lines I draw every day on my chart. So, this is where our high stopped yesterday. This is where our high stopped last night pre-market. Right now, we are just ranging in between those two lines. You can see we got a little reaction here, just a little one, and then it continued on, and then boom, rejection off the overnight high, sitting at 681. So no trade for me right now. Range is the kryptonite to the scalper and the day trader. Whenever we see price doing this, right, just floating sideways, that is very hard to day trade. So you'll usually get lagging signals on your indicators. Back to what you asked earlier, Freaky, about why didn't I wait for the MACD to roll over? That's another reason. If you are in a range, the MACD will lag and it can chop you up. So when I see this happening, I'm usually very cautious of this type of movement, because you buy a put and then all of a sudden you're in a call, or you don't make anything on the put, or you're losing because by the time you get the signal it's too late, and then you get into the call, and then by the time you get the signal it's too late. Look at when the MACD rolled here right at the top, right? That was too late. That would have chopped you up. You would have lost money on that trade as it came down. So it's just something to be aware of. Range is something I'm very, very careful of and cautious of. I've had that happen in a range. Yes, so you know what I'm talking about. It hurts you. So usually if I can, I try to avoid it. There's a couple of things that help us define a range. Obviously, one is we're not going too far up or down. The other thing that helps you notice a range, it usually takes a while to get there, but you'll start to see the moving averages bunch up together. So here we've got, the 3, the 9, the 21, and the 50 all within just a little area. That is also another way to notice that we are ranging. The other thing we can notice a lot of times when we're ranging is descending volume. So you can see the volume here is starting to come down. So that also lets you know that we are in a range. So there's a few things that tell you that we're moving sideways, but usually I catch it just by sight. Okay. Let's see if we can get a little push up here. Looks like the MACD almost wants to roll over. VIX down to 22.91. Getting a red candle on the VIX. I would be careful of a call here because we're so close to this resistance area. So even though the MACD is fixing to roll up here, this would be a little riskier because we're so close to that overhead resistance. I'm 50-50 on taking this call here. Does TTM squeeze help indicate when money is trying to exit a range? You bet it does. It absolutely does. I'll show you the TTM squeeze here in a minute. I do use it. I don't have it on my charts right this minute, but I do like it. All right, no turn here yet. TTM as an indicator is developed by John Carter, who I really like as a trader, really like John Carter. He wrote Mastering the Trade. I've read that book probably 3 times. It's an excellent book. It includes a lot of good technical things, but it also includes a lot of talk about the psychology of trading, which I really appreciate. But yeah, he created that indicator, the TTM squeeze, and I do use it. I do like it. It will try to tell you when we're in a range. Basically, what the TTM squeeze does is it looks for situations where the Keltner channels are coming inside the Bollinger Bands. Those are 2 really popular indicators that have been around for a very long time. And when the Keltners come inside the Bollinger Bands, it's indicating that we could be ranging. The only problem I have with TTM is that it's a little bit lagging, like all indicators, and it keeps you out of some good trades sometimes. All right. I'm getting more interested in this call here, but we're right at this resistance zone. So I'm cautious. All right, I am going to take the call here. This is risky. Don't follow me unless you're okay with that, because it may reverse right here at this overnight high. I am in. And we've just made a high. I'm out here at 9%. Punch it. I'm out. There it goes. Hopefully, I don't know if anyone followed, because I did give the warning that it was riskier, and it was because we were right here at this overnight high. So I don't know if you did follow, but if you did, should have gotten 8, 9, 10%, hopefully. Okay, Freaky Turkey has a habit of getting a wrong direction when it blows. Yeah, I would agree with that as well, Freaky. All right, so yeah, see, we hit this high. That's why I jumped out. A lot of times when you hit a new high of day, you'll get a little pullback. I'm not saying we can't go higher. I think we will. But when you hit a new high of day, you'll get a little pullback. So I'll just jump out and take my quick win. I'm okay with an 8 or 9% win. Did anybody follow that one? I know I did give the warning to be careful there. Yeah, see how we're getting that just a little pullback. It doesn't mean we're going to change directions, but a lot of times we will get that little pullback. I'll throw a TTM on here. Gavilan didn't get in. Good, Gavilan. I did give the warning, and on these types of trades, if you're not fast, you can lose money. So I'm glad you didn't take it. Jeff. Hi, Jeff. Jeff got 4%. Nicely done. Very good. Okay. I'm going to throw the TTM on here, like we were just talking about, the TTM squeeze, just so you can see what it looks like. Here we are. I'll make it a little bigger. All right. So you can see basically the TTM does two things. It gives you direction very much like a MACD. So it does these histogram bars, very similar to the MACD, follows the MACD pretty closely, I think. But the other thing it does is it gives you these green and red dots along the zero line. And hopefully you can see it. Let me zoom in more if you can't. These dots right in here, these are red, these are green. These dots represent when the TTM thinks we are in a squeeze, meaning a range. And again, that is based on when the Keltner channels come inside the Bollinger Bands. So in this case, the TTM did not catch this squeeze until the very end. It was late. And then it said, okay, the squeeze is breaking to the upside. Well, it sort of did, but only by 1 bar. So that is the TTM squeeze. I like it, but I'm pretty good at recognizing a range without it. And like I said, sometimes it'll keep you out of a good trade. So I kind of, I'll use it sometimes as a secondary indicator, but honestly, not that much. Okay. I'm going to take that back off because this screen is entirely too busy. All right. Now we are looking like we're getting a potential move down. What we want to see is a break of this bottom here at 680.4. If it breaks that, we might consider puts. There's a strong green bar on the VIX. Do we want to consider puts here? I personally am going to wait a bit on puts. I think we could get a little correction here, but let's watch it. We've got this bottom here that we need to watch. Could it turn and head back up? Yes. 681.9 is our new high of day. I'm going to look at volume again. We are getting increased volume at 682, which we've almost hit. And then 683, 684 are growing. I do think they're going to try to make a run up. Like I said, for the 100. And again, it's only 17, 20 points overhead, roughly. I do think they will make a run for it, but what are they going to do first? Well, looks to me like they're going to play, burn the theta game. And so remember, we were talking earlier about 0 days to expiration. The issue with zero, here's the good part, right? The 2 trades that we've taken on the stream today, we made 13% and 8%, at least I did. Those were made within seconds, right? So you can make profit really fast on a 0 DTE. That's why I trade it, right? I talk to a lot of traders, and I'm not saying there's a right or a wrong strategy, but I do talk to swing traders who will hold, a week for a 10% win or a 20% win, right? I'm holding for seconds for a 10% win. So for me, that's just my personal style. It's my strategy. It works for me. That's what I do. And so when I am looking at these 0 DTE trades, I know that that time is my enemy. Time is the enemy of all options, but especially 0 DTE options. So you want to get in, you want to get out quickly. That's the name of the game. And what do they want to do? They want what we call to burn theta. Okay, we're getting a jump here. I'm looking at these. I'm going to look at the 681 calls. I'm not in them yet. MACD starting to brighten up. $34, we're getting close. 27. It's moving pretty slowly here. Still respecting this overnight high. Just watching this movement here. This little rejection of the overnight high. I do think they're going to try to punch up through it here at some point. We just don't know when. That's what we're watching for. So back to talking about what is the reason that we see these ranges. We see them almost every day, and they go on for sometimes hours. So this range has been going on since, almost an hour. It's been going on almost an hour here. Sideways, sideways, sideways. Why do they do that? Remember this, your broker is probably taking the other side of your trade. That's a real thing. Look, chat GPT it if you don't believe me. And believe it or not, they are probably trading against you. They're trading against the retail usually. So what is the name of the game from the broker perspective? If retail's buying the option, and most of retail is buying the option, some of us sell options, and I do. But by and large, I buy the options. That's where I make my most of my money. That's the highest profit, is single leg directional trades. That's the highest profit, in my opinion, 0 DTE. So most of retail is buying the option. Your broker is selling the option, or the market makers or the institutions, whatever you want to think of it. Think of it as big money, right? Big money is trading against you most of the time, right? So when that happens, what is the name of the game? If the majority of traders are trading 0 DTE, which they are, 0 DTE has exploded as one of the largest sections of trading right now. I think it's 60% of options trades are 0 DTE. It's a huge percent. And since 0 DTE's explosion, what has big money learned? We've given them another tool to beat us, right? And that tool is theta. That is the Greek name for time decay in the options world. So as these options move toward expiration, we are losing value. Even if the option goes in your favor, let's say we're in calls right now, and even if it comes up, if it only comes up a little and just keeps going sideways all day, it doesn't matter. You're going to lose eventually at the end of the day if you hold that option all day. So big money will come in here and they will just manipulate this market, pull it sideways for as long as they need to burn your theta. So if you bought the call here, let's say, an hour ago, and it gets up to the exact same place an hour later, you do not have the same percentage win as you did here. You've lost money because of theta. So the name of the game has become pull the market sideways, and you'll see it happen almost every single day. They will pull the market sideways for a good bit of time to burn that theta. They are collecting the premium when your theta is shrinking, when your value is shrinking away because of time decay. The market makers, big money, they are collecting that premium. Okay. It's a zero sum game. Trading is a zero sum game. If you win, another trader loses. If you lose, another trader wins. All right, Andrew, they suck. They do suck. But I'll tell you this, we are smarter. And there is one main benefit that retail traders have that big money doesn't have. We have the ability to move in and out light on our feet very fast. Like you saw these last two trades that I took, in and out, 30 seconds, 1 minute, boom, 13%, boom. We strike like a ninja, like a guerrilla warfare. We get in there, we strike, and we get out. That is what we are trying to do. That is one of the only benefits that retail has over big money. They cannot move. They are moving a big Carnival cruise ship. They cannot turn that thing like we can. We can jump in and jump out. They can't do that. Their positions are so big, so massive. They have to do it in chunks, and they have to do it slowly. So they do suck. They do try to hurt us. However, we make money by striking quickly, in and out, boom. That's how we win. Okay? That's how I win. Emerald Plumber, are you going to be on here daily? Yes, sir, I will be. I'm assuming you're a sir. Forgive me if you're not. I am here every single day at 11 a.m. Eastern, and we are actually coming close to the end of our stream. So I'm going to give you the playbook for the rest of the day. For me, what I visualize potentially happening and how I intend to trade it. I think we could make a run for the 100-day moving average. I've already stated that earlier. And again, that's sitting at roughly 68.46-ish on the S&P 500, about 20 points overhead. When they are done with their little sideways game, we could pull down first, but I think overall today we're going to come up and tag that 100 and try to reclaim it. If we don't, if we get a surprise drop into the close, this could be the dead cat bounce that I was talking about. If they can't run up and try to reclaim the 100 today, there could be trouble in this reversal. So bear that in mind. I'll be looking for that push, and I'll be ready to trade calls. However, if we, for some reason, reject that, we don't ever hit that moving average, and we reject, in this level or even a little higher level, and we come down and we never recover that 100, I am definitely open to puts as well. I like to look at calls above the VWAP. That's this line right here, the white line. And I like to look at puts below it, but I will break that rule. That's more of a rule for newer traders. It's more of a guideline for me, but it does help you understand if the market is bullish or bearish when we are over the VWAP or under it. Okay, Gavilan, you're great. Thanks for being honest about the market. You're welcome, Gavilan. Just my experience. Let's just put it that way. All right, guys. So now you know my trading plan for the day. We took two great trades today, one at 13%, one at 18%. And those were fast. We were in and out. So join me again tomorrow at 11 a.m. Eastern, and hopefully we'll get to do it all again. Remember this, tomorrow morning, we will have CPI data. That is the Consumer Price Index. It's what the Feds use, one of the tools they use to determine inflation. It determines how they feel about rate cuts. Rate cuts determine how the market feels about life in general. So be watching for that. Be careful with overnight trades if you do them, because the CPI can upset the apple cart pretty easily. If we get a number that could be either good or bad, we can see it skyrocket or dump, and we just don't know until we get it. So that's tomorrow morning pre-market. All right, guys, it's a pleasure to trade with you. Thank you so much for joining me. Thank you for jumping in the comments. I really, really appreciate you guys. And if you haven't subscribed, I would love it if you would do that as well. I'll be back tomorrow at 11 a.m. Eastern. Have a great rest of your day. Bye for now.